In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, drivers for Uber and Lyft turned off their apps Wednesday to protest what they say are declining wages at a time when both companies are raking in billions of dollars. How will the strike hit the companies as both enter the public markets? Plus, Facebook's blockchain bet, the social network's secretive team, now has 50 employees and may announce its new product, a type of cryptocurrency, later this year. And a new report says hackers co-opted tools of the NSA, how a China-linked group turned the tables on the U.S. surveillance agency. But first, to our top story. It is a big week for Uber as the company prepares to hit the public markets, but the road to an IPO is often bumpy, and simmering tensions between drivers and Uber are flaring again. Drivers in major cities across the U.S. and the U.K. went on strike Wednesday over low wages and unstable working conditions. The protests are familiar to anyone who followed Lyft's IPO, which valued the business at $25 billion in March. As the company pitched itself to investors, protesters attempted to picket the company's roadshow, and drivers went on strike in San Diego and Los Angeles. Joining us now, Michael Rowland, COO of Fountain, a company that works with gig economy companies. Also with us, Bloomberg Tech's Eric Newcomer in New York, who covers Uber and Lyft. So, Eric, as far as we know, how big are the protests right now? Where are they happening?
You know, this is all over the world, designed to really draw attention to Uber drivers right, ahead of the pricing and then listing on Friday. So this is, a global effort, I think. There are some questions about the effect because people can still, get cars, but certainly the presence has been made known here.
So anecdotally, it sounds like it hasn't necessarily crippled the app. Is that correct?
Right. I think it's super hard to do. Sort of by its very nature, Uber can be responsive to a strike because, the prices the drivers might get paid go up if there aren't enough of them on the marketplace. So I don't know. It's hard to sort of see into that dynamic, and obviously it's different in different places. But yeah, as far as we can tell, the app is perfectly operational at the moment.
Now, Micah, the reality is there are more gig economy companies, more workers in demand. So how do you think a strike like this will affect Uber?
I think a strike like this is more of a PR exercise, frankly. I don't believe that this will have a big impact. Also, anecdotally, my wife was able to use Uber this morning to get to the airport at a roughly normal price. So I think the more interesting question than the impact of a one-day strike is to see whether or not driver retention for companies like this and gig economy worker retention over the course of the next couple of years will suffer as we see these companies maturing, with workers starting to understand which pay the best wages, have the best work, have the best lifestyle to offer.
A couple of quotes here from drivers. Syed Ali, a driver for Uber, saying, "I'm striking because Uber has broken their promises to drivers time and again. At first it was good money, but then Uber cut our rates and tried to tell us we'd be earning more even though they paid us less." Kevin Ragu, a driver for Lyft, saying, "I'm making so little money even with all the hours I work. The bills add up. If something happens to my vehicle or even the wear and tear to my car can push me into more debt. Our expenses keep going up. Meantime, these companies are getting rich. We need them to reduce commission and give drivers a fair share of the revenue they take from passengers." Eric, what is Uber saying about this today?
I think they're trying to take a sympathetic ear to drivers. I mean, they're not, shouting down these protesters. I think they understand that it's always sort of a challenged relationship. In the S1, Uber talked about how, bringing down driver subsidies or excess incentives, as Uber talks about them, could, further irritate drivers. And I think that's going to be a challenge because obviously Uber is a company that lost $3 billion in operating losses last year, $10 billion over the last 3 years, and yet drivers, which are a main source of their costs, clearly from these protests feel underpaid. So solving those two problems, one, drivers who feel like they don't make enough, and on the other hand, trying to make money is going to be an huge challenge for Uber.
So, Micah, talk to us about the ripple effects this will and continue to have on the gig economy, the broader gig economy. I mean, can these drivers make more if they're a delivery person for Postmates or doing tasks for TaskRabbit?
Sure. I think it may be a little bit too early to tell long term, but what should happen in these companies over time is, as they're able to build a stable business model that incorporates the right level of labor, and they get a model in place that will retain drivers or workers, whatever those workers do in the particular company, wages, I expect, will fluctuate. So some of these companies may find that they have to raise wages in order to keep their workers on over the course of the time period that they need them to be working to be profitable. And if that happens, I expect that some companies that have more margin to spend on labor will find their labor costs going up over time. Other companies may have less margin, and in that case, those companies will either have to change their model, or I think that we will see over time some of these gig economy companies get driven out of business as we see whether or not consumers are willing to pay the higher prices that may be imposed by higher labor costs.
Do you think Uber or Lyft will get driven out of business given the demand for their services?
Probably not. They have huge stores of capital at their disposal. Obviously, Lyft has fresh capital. Uber's about to get fresh capital, and they have plenty of momentum to try and figure out the way to retain drivers. This is also their core business, and so they are in a situation where they'll have to figure that out. I think there are many other companies out there that either have gig economy workers as part of the core but don't have the same advantages that may struggle, or companies that have been either developed as a strategic add-on to a company that has a profitable core business, a grocery company or something like this, and those companies will adjust in different ways from Uber and Lyft.
Meantime, Eric, you've got international leaders speaking out of this. Jeremy Corbyn, head of the Labour Party in the UK, saying Uber cannot be allowed to get away with huge payouts for their CEOs while refusing to pay drivers a decent wage and respect their rights at work. Stand with these workers on strike today across the UK and the world, asking you not to use Uber between 7 a.m. and 4 p.m. today. Hashtag Uber shutdown. While Uber has only one CEO, but, from the point of view of drivers, how much does that CEO make? And when you're looking at many of these employees who are about to get rich on an IPO, is it easier to understand their position?
Right. Uber CEO Dara Khosrowshahi received $45 million last year, according to the S1, so is obviously getting very well compensated for his job, and it's a striking contrast to how much a driver is getting paid. And obviously Uber has a political problem, especially on the left. I think Alexandria Ocasio-Cortez tweeted about this. Bernie Sanders has been talking about it. So I definitely think throughout this Democratic primary, I wouldn't be surprised if candidates keep talking about Uber. Obviously this is a great moment to talk about it because Uber is about to go public. Sort of a vulnerable moment for the company, not the press that it wants right now. But there's going to be this liberal conversation in the Democratic primary, and I think that is going to be a moment to talk about labor in America. And obviously, Uber is sort of central to that story. So I don't think this is going away once Uber becomes public. And then the question is just whether that conversation can actually turn into some sort of federal legislation that would actually change Uber's business, or if it's just talk. And I think that's going to be the question going forward.
Well, the conversation will certainly continue as the strike continues to unfold. Our very own Eric Newcomer and Micah Rowland, COO of Fountain, thank you so much for joining us today.
Good to be here.
Well, IBM kicked off a debt offering that may make this the corporate bond market's busiest week in at least 8 months. Bloomberg is reporting the company plans to sell senior unsecured bonds in as many as 8 parts to help fund its $33 billion acquisition of Red Hat. IBM still expects the deal to acquire Red Hat to close in the second half of this year. Coming up, Facebook has a plan to start making money off WhatsApp, and it's making London the center of what it hopes will soon be a global phenomenon. That's next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Ever since Facebook acquired WhatsApp for $19 billion in 2014, the question has been, how do you monetize it? Well, one way is by trying to turn it into a mobile payments platform. And now we know that the social media platform is planning to use London as a base to drive a global expansion of WhatsApp for mobile payments. Facebook isn't stopping there. It's got designs on using WhatsApp to transfer its very own cryptocurrency. Here to tell us all about it, our fintech reporter Julie Verhage in New York, and with me in the studio, Kurt Wagner, who covers Facebook for us. So what is Facebook doing here exactly?
Yeah, well, this is kind of an office expansion. So they're going to add about 100 employees in London. They're going to be working on WhatsApp. They're going to be working on payments and kind of some security features. But really the idea is that WhatsApp is such a global platform. It's used, it's huge in India, for example. It's really big in Europe. And so they think this is maybe a better recruiting ground for them and a good place for them to kind of launch this new payments initiative.
So how would the payments initiative work?
Well, right now it's just being tested, and it's actually only being tested in India. So we have not really seen a whole lot about it. But imagine, you know, you're sending money to friends, you're sending money to family. You want to do that in a way that's obviously secure, but also convenient, right? And you're probably texting with these people, messaging with them. WhatsApp has those messaging conversations. If it can add a payments feature on top of that, I think they see there's a potential business there.
So, Julie, the other part of the story, Facebook working on launching its own cryptocurrency. How does that make sense?
Right, so I think this might be a way for them to do more cross-border, something that the team is exploring with David Marcus leading it, who, if folks don't remember, was the president of PayPal for a really long time. They're exploring cross-border with blockchain, and something that could actually work fairly well if you have other players coming into it. There's been rumors that maybe partner with someone like Visa, First Data, others, to have people actually use WhatsApp and this sort of Facebook coin or whatever they might call it to make payments or send money to family and friends in other countries. And having that as one stable currency versus having to go through all the FX conversion, lag time, stuff like that could actually be a good thing. But if you think back, this isn't the first time that Facebook has tried to make payments work, right? Like, there's a reason that they have to have really smart people on this team to even have a shot at being able to make something like this come off the ground, because there's other companies out there that are very competitive in this space, and payments is just cutthroat in general. So it is going to be a long shot, but they do have very smart people on this team, as our story talks about, working on this.
So let's talk about the team, Kurt. You know, Facebook, Mark Zuckerberg long ago hired David Marcus, the former CEO of PayPal, to run Messenger, and then he went off to work on this secretive payments cryptocurrency initiative. And he has, as we understand it, hired a bunch of former PayPal employees, sort of a new age PayPal mafia, even though I hate that term. Who are these people?
Yeah, well, Julie's actually the expert on the PayPal stuff. She had a great feature this morning on Bloomberg, kind of about who's being hired. But you can see that David is starting to bring over these people who he used to work with at PayPal, who are obviously payments experts, to say, to Julie's point, this is a really hard problem. Facebook has not nailed this. They have not been able to, you know, establish, plant a flag, if you will, on the payment space. And so if you're going to do that, who do you want to bring over? You want to bring people who have built this stuff before.
So, Julie, we're not talking about Peter Thiel or Max Levchin or Elon Musk. Who are these former PayPal employees?
Right. It's going to be a lot of people that viewers haven't actually even heard of outside of David Marcus, but it's his former PR executive. It's people that were working a lot on peer-to-peer payments, on fraud protection, and a lot of things that Facebook is going to need deep industry knowledge on if they want to get this off the ground and actually make it work in terms of, you know, getting mass adoption. A lot of consumers to trust using this after a rough, year and a half for Facebook in terms of just waning consumer trust in the platform, and then protecting against fraud as well. This is something that people might want to hack into, misuse, things like that, that they know going into it they're going to have to protect against.
So, Kurt, how does this fit into the broader strategy and the broader challenges that Facebook is facing in general right now? Yeah,
I mean, Facebook is an advertising business, right? I mean, I think it's 99% of their revenue comes from one business model, which is they show people targeted ads. So this is definitely a new opportunity for them. There's been a lot of talk about, should Facebook diversify that business? Where can it diversify that business? And the idea of payments is really compelling, not only because it is a global feature that people are using all around the world, but there's also some untapped potential for them there in the sense of this is not something they're currently taking advantage of. And so I think there is a lot of hope from some investors that Facebook can figure out what does the company do that's not just advertising.
All right, Kurt Wagner, Julie Verhage, I know you continue to follow all of these initiatives for us. Thank you. Coming up, Byron Allen's Entertainment Studios is picking up momentum, securing yet another TV deal. How the comedian and former TV host is expanding into local broadcasting. And of course, we're live streaming on Twitter. You can check us out there at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Fiber network owner ZAYO Group is going private in a deal valued at $14.3 billion, including debt. The buyers are Digital Colony Partners and Stockholm-based EQT Partners. The price represents a 14% premium to ZAYO's closing price Tuesday. The company's been under pressure from activist investors, including Starboard Value. Well, comedian turned businessman Byron Allen is building an entertainment empire. After taking part in Sinclair Broadcast Group's $9.6 billion acquisition of Fox's regional sports networks last week, he announced plans on Monday to buy 4 TV stations in Indiana and Louisiana for $165 million. Allen's company, Entertainment Studios, already owns several syndicated shows and acquired the Weather Channel last year, but this week's deal marks its first foray into local TV. Bloomberg's Ed Hammond sat down with Allen, the Entertainment Studios chair and CEO, to discuss.
When the assets became available this past summer, I reached out to the head of Disney and said, we have interest. They put us in touch with their investment bankers, and we started to get into it. And then something else became available that we started to pursue, another large asset. And it didn't work out.
What was it?
It was Tribune. We were very interested in buying Tribune Broadcasting, a phenomenal asset. And Nexstar prevailed, and they're a terrific organization. Perry Sook, he does an amazing job, and he won the asset. And we turned our attention to what's next. And we saw that the RSNs had not been concluded. I'm a big fan of Rupert Murdoch's. I think I've read everything about him. And I've always told him whenever I've run into him, I'm his illegitimate son. And this is some of his best work, these RSNs. And I'll tell you, a quick story. I guess Larry Ellison asked Rupert Murdoch, hey, Rupert, talk to me about television. And Rupert said, Larry, I can tell you everything you want to know about television in 30 seconds. Do you have time? And Larry Ellison said, yeah. And he said, sports. That's it. That is the ultimate leverage. Sports, these RSNs are some of Rupert's best work. And when it became available, we said, let's see what we can do. Now, we have a great relationship with Sinclair.
A historic one. It's because you sold your first show to them, right?
Oh, yeah. When I started the company from my dining room table, and I started selling my very first television show, Entertainers with Byron Allen, where I'm interviewing movie stars, talking about their latest movies, he was one of my first buyers. And when he only had 2 stations, Dave Smith. I think it was Pittsburgh and Baltimore. And I called every television station from my dining room table and asked them to carry my once-a-week 1-hour show for free. And I would keep, there's 14 minutes of commercial time. I'll keep 7 minutes. And you, local station, you get 7 minutes. You sell your 7 minutes to local advertisers. I'll sell my 7 minutes to national advertisers.
So you're alongside them in this deal.
Yeah.
But what is the role of Entertainment Studios? Because we know what Sinclair's bringing to the table. We know the finance that they brought to the table. How much are you guys invested in this?
So what I did, right? So what I did, I put in personally a small amount, which I can't disclose.
How small are we talking? Like $10 million, $100 million?
Well, small is relative, right? So I put
small
in.
Is relative.
That's right. I put in a small amount personally, because Allen Media does have debt, and we have investors in our debt, and I would never invest capital of Allen Media in something that we don't control 100%.
Right.
So we love the idea and we love the platform, and I said, you know what? It doesn't fit the profile of Allen Media, but I personally, Byron, will do it. But
so it's not an ES either.
No,
it's a personal investment.
It's literally a personal investment. But Allen Media has to have a seat at the table in providing content to you. And they were like, this is a great idea. And they were immediately, they said, this is perfect. You've been providing content for us for over 25 years. So all the upside for Allen Media, none of the downside, and I have taken that personal risk. But Allen Media is something that I own 100% of. So obviously, it's very key to me. But when you have stakeholders in the form of debt, you want to be careful there. So we see enormous opportunity there to provide content, and whether it's the Weather Channel, which I bought last year.
Another very high-profile deal.
Yeah, I bought that from Bain and Blackstone and Comcast, and the Weather Channel is phenomenal. It's iconic. It's 9 consecutive years of the most trusted news brand in America. And, you know, there's a lot we can do with the Weather Channel and these RSNs. There's a lot we can do in terms of documentaries and biographies, and who knows, maybe even sports leagues. You never know.
So talk to me about the play, because I'm trying to sort of get my head around the unifying theme here. You have some local TV stations that you bought on Monday. You have the regional sports networks play.
Oh, that was Monday, so that was old news.
We're at old news. And then obviously the Weather Channel last year. What is the concept for entertainment studios? Where does this company go?
Well, you know, I've always said my goal is to build the biggest media company in the world.
But what does that mean? Does it mean in terms of market cap, in terms of viewers?
In terms of top-line revenue, in terms of EBITDA, in terms of size, in terms of scale. I've always made that clear. That's it. Every day, that's what I'm striving for.
You think the debt market's there to do it?
To do what?
To roll up enough companies to be the biggest media company in the world.
Some of it's debt, some of it will be equity, some of it will be free cash flow, some of it will just be you have to be real clever in the moves you make in this chess game. But, you know, I started the company from my dining room table 26 years ago, and I could barely pay my phone bill. I mean, there were days they turned off my phone, and there were days I didn't eat, and there were days I was calling TV stations like Dave Smith from a payphone. And we just kept plugging away. And finally, we kept selling show after show after show. And we ended up with about 43 television shows and one of the largest privately held television libraries in the world, close to 5,000 hours. And I was able to go to Verizon and convince them to let me use my library to launch networks. And we launched 7 networks with them. And then we bought our 8th network, the Weather Channel. And now we have a phenomenal streaming service that we were able to capture in the Weather Channel purchase, Local Now. And Local Now is an amazing streaming service.
That was Entertainment Studios Chair and CEO Byron Allen. Coming up, when it comes to cyber warfare, the NSA is known for its dominant position around the globe. So how did then hackers steal its cyber tools and put them to nefarious use? We'll discuss. And later, a slew of tech companies heading to the public market this year. U.S. Securities and Exchange Commission Chair Jay Clayton breaks down the IPO requirements. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Back in 2017, a group of hackers known as the Shadow Brokers leaked NSA cybersecurity tools onto the internet. Those tools were subsequently co-opted by nefarious groups and then used in global malware attacks like WannaCry. Remember the ransomware attack that affected hundreds of thousands of computers in dozens of countries? Well, it turns out a different group of hackers known as Buckeye had access to those NSA tools over a year before all that even went down, and they were put to use. This all according to a new report released by the cybersecurity firm Symantec. To discuss, we've got Vikram Thakur in LA, technical director of Symantec, and in studio with me, Bloomberg Tech's global executive editor, Tom Giles. So Vikram, I'll start with you. What exactly happened here?
Hi, thanks for having us. What we really found was that the tools that were ultimately released by Shadow Brokers in 2017 had been previously used as far as over a year prior in early 2016 by a group called Buckeye. And why this is significant is that we did not believe that those tools were used by anybody except the original authors of the tool, who was allegedly the NSA, by anybody. But this completely debunked that theory, and for the first time we were able to see in reality, and we had evidence to the fact that a tool that was purposed or created by one attacking group or one set of hackers was repurposed and reused by a completely different group originating from a completely different side of the globe.
So, Tom, this effectively turned a dangerous group of hackers into an even more dangerous group of hackers, and there are other private cybersecurity firms that are attributing this to China.
Right, right. I think what this shows is just the way that this has become a very, very global. Cybersecurity and cyber threats have very much become another weapon in countries. Tools for espionage and obtaining trade secrets. It looks like different industries were targeted here. And so, you know, this underscores the way that technology is very much at the center of an arms race right now, and who can be ahead, who's ahead in really key areas of technological innovation. China versus the US. We're seeing this played out time and time again. 5G is you know, a technology that comes to mind in ways that overtly the United States is telling other countries to be on its side when it comes to what kinds of technology they use. But also there's these very under the surface ways that this war is being played out, and it's really you know, through cybersecurity, through cyber espionage.
Now, Vikram, I know Symantec isn't directly calling out China here, though other private cybersecurity companies are. Why not?
So, I mean, attribution to a specific group or a country is not really the place where Symantec finds itself. I mean, technology can lay breadcrumbs where you can identify pieces of traits that actually come together and point you in a direction. But I think the last mile in attribution is really the job of either law enforcement or public sector agencies. So while we can somehow tell you that a person or at least a certain computer was used for an attack, there's no way for Symantec to tell you from a technological perspective whether the person who was operating the computer belonged to agency A or B, or his computer was just being used by somebody else to perform a completely different attack. So we leave that aspect to law enforcement and other public sector agencies.
Okay, so whoever is behind it, as I understand it, it was an NSA attack on their computers and then enabled them to steal the tools and then use them for their own ends. Is that correct?
So that's correct. I mean, until now, it was a very theoretical belief that if one attacker group attacked another, then somebody who was watching what was transpiring would be able to learn and repurpose those attack tools themselves. But this is the first time that we've been able to take that theoretical knowledge and provide some evidence as to what's really happening. And through a series of technical analysis, we've been able to prove that the only way that Buckeye was able to repurpose these tools created and put out there by the shadow brokers was if they had visibility into somebody getting attacked, or one of the networks which were at the receiving end of the equation group or the shadow brokers tools themselves. So this really puts out a new impact to the rest of the world, which is a couple of things. One, now every agency or every country's agencies who are involved in offensive attacks are now going to be looking at their own playbook and saying, okay, well, if the adversaries can watch and can use these tools, what is our responsibility to the end users? Because anything that we use against our adversaries might be used against our constituents as well. So there's a whole debate which is going on about how do we balance the offensive capabilities versus defensive responsibility that some of these government agencies have.
Tom?
Right. And I think it shows that, you know, U.S. industries and other industries outside the U.S. are caught in the middle of this tug of war. And I think he hits it right on the Symantec hits it right on the head, and that is, what is the U.S. responsibility to U.S. industries when it comes to, we found this being played out on your servers, in your system, in your motherboards, whatever it is. How forthcoming can they be, and how much information sharing does the U.S. want to have with U.S. industries? How much do U.S. industries want to share with the U.S. government, and how much can they and should they, is appropriate for them to work together to combat this?
Vikram, is this an indictment of the U.S. cyber defenses? And at this point, can the NSA do anything? Can they counterattack? Can they get these tools back?
So, I don't believe that this is an indictment of the NSA or any other a national agency. I mean, national agencies have a mandate, and they'll use whatever tools are available from a legal perspective to them to achieve that mandate. Now, all this discovery really adds on to their existing mandate is another factor that they need to consider when they use some of the tools that they actually do. I mean, it changes the risk that some of their tools expose to their own constituents who they're trying to protect. So it's really a debate, and there's no silver bullet out here, because some of these attacks are perpetuated for nationalistic or should I say national purposes, but at the same time there is a responsibility or risk which is being inherited. So how do we really solve that problem? Now, to your other question about can these tools be brought back, unfortunately, what has been released publicly cannot be brought back. What can be done is another assessment before the next set of attacks take place, with an understanding that the adversaries are looking, are watching, will learn. So how is it that we can achieve both our purposes of the goals required or mandated by the national mandate, or what is it that we can do to protect our end users as well?
Fascinating stuff, what's happening out there in cyberspace. Vikram Thakur of Symantec and our own Tom Giles, thank you. Well, sticking with hacking, one of the world's largest crypto exchanges says hackers stole 7,000 Bitcoins worth about $40 million. Binance says the hackers pulled off the heist using a variety of techniques in a, quote, large-scale security breach. The exchange says it will use an emergency insurance fund to cover customer losses. Binance says it will conduct a security review on all parts of its systems and data. Coming up, Volvo's electric car company Polestar is coming after Tesla, but will trade tensions between the U.S. and China stand in the way? We will discuss next. This is Bloomberg. Well, Swedish electric car maker Polestar is going after Tesla and the electric car market. The company announced Wednesday it's setting up a new R&D center in England with a team of 60 engineers, jointly owned by Volvo and the Chinese parent company Geely. Polestar is currently manufacturing its only hybrid, the Polestar 1, and unveiled its mass-market sedan, the Polestar 2, a competitor to Tesla's Model 3, earlier this year. Joining us to discuss, Polestar CEO Thomas Inglot. Thank you so much for joining us. Good to have you here in the studio all the way from Sweden.
Thank you, Emily.
So tell us about, just give us the broad view of your cars coming on the market. None of these are out yet, but you've got a hybrid, you've got a sedan, you've also promised an SUV.
Yeah, there's a hybrid Polestar 1, a very exclusive collector's car, 500 we produce every year, so that's really a very luxurious, exclusive sports car. Now, very different to that, Polestar 2 is a full electric car. We introduced it here in the US for a price of $55,500 after federal taxes, so a very competitive offer for a powerful 300 kilowatt long range car. And I think specific for us and our company is the great design, Scandinavian, pure progressive design. That's what it stands for. And, you know, I'm here in town because of Google I/O. We have an Android-powered infotainment system in that car.
So let's talk about this. You're using Android Automotive, the Android Automotive operating system in your car. Why did you choose Google's operating system?
It's, I think, for the benefit of our customers to have this incredible artificial intelligence of Android Google Assistant in there. It is the smoothest way of integrating your digital life that you're used to into your car. You get Google Maps, you get the Google Play Store. All that is an amazing offer.
And you're opening a new R&D center in the UK. What's the strategy there? Why the UK, especially given all of the political upheaval happening as a result of Brexit, or the lack of Brexit right now?
Well, that doesn't change the fact that there are great engineers and people who really know how to engineer sports cars that are lightweight. It will accelerate our way to market. And obviously, low volume production is as well their specialty. So we think it's a brilliant addition to our competences.
So what do you have on Tesla? I mean, is it fair to say you're coming for Tesla?
Well, we are adding the offer in that market. And I think it's an intriguing offer with a company that is offering, as I mentioned, the great design, our Android system. I think you can trust and rely on our promises because we have the backbone of great parents who know how to produce cars. We can as well work with the supply chain when it comes to spare parts and stuff. So I think there's a high trust into us delivering on what we promise.
So let's talk about your parents, Volvo and Geely, the Chinese car maker. We're in the middle of a trade war between the United States and China. How might that impact your plans, your production? Is it something that you are preparing for?
We have prepared for that. Our business plan is conservatively planned on the tariffs in place right now. So our offer of $55,500 for the Polestar 2 is based on the existing tariffs. As a company, we support free trade. We believe in that as a benefit for the whole world, but we live with the facts as they are.
So, it's difficult to figure out what's actually happening between the United States and China right now, but there are reports that the Chinese are backtracking. You've got President Trump threatening tariffs as of Friday. What would you like to see happen? How would you like to see this resolved?
That is beyond my wishes, and I really only can say we have adapted to the situation as it is. Will we see improvement? Great, we would embrace that. If not, we are prepared for what is right in place now.
All right. Polestar CEO will look for the cars to hit the market. Thomas Ingelett, thank you so much for stopping by.
Welcome.
Well, as several tech companies head to the public market this year, they're going to be required to disclose important financials detailing growth and losses in their regulatory filings. But does reporting that kind of information discourage companies from going public in the first place? Bloomberg's David Rubenstein sat down with U.S. Securities and Exchange Chair Jay Clayton to talk about it.
I think the approach is the right approach, which is give us all the material information about your company when you're going public. That is the right approach. Should we have the same amount of disclosure for our largest companies that we do for those smaller and medium-sized companies? Probably not. I mean, the mega global companies, they need to provide us with much more information than the startup biotech does. And what we're trying to do at the SEC now is say, can we scale our disclosure requirements in a way that makes it more accessible for those medium and small-sized companies?
Now, if you are a publicly traded company, every quarter you file information with the SEC updating investors on developments in the previous quarter. What about just doing it every 6 months as opposed to every quarter? I know that's been debated. You have a view on whether that's a good or bad idea?
Well, markets thirst for information. Investors thirst for information. They want information on a regular basis. I don't expect that quarterly reporting will go away anytime soon. If you borrow money from a bank at the same time as you're selling stock, that bank's going to want quarterly information. I don't know many loan documents that have semi-annual information. So but the real question for us is, do you need to do something as extensive every quarter as we require today? Because you know what happens? People take this quarterly report, say the one that would be filed in June, and they compare it to the March quarterly report. And all they really want to know is, what's in the press release, the earnings press release, and what are the changes. And yet we make people file a very large document. So we might be able to do something that's more streamlined on a quarterly basis.
SEC Chair Jay Clayton there. You can catch the full interview on the David Rubenstein Show, Peer-to-Peer Conversations, tonight, 9 p.m. Eastern, 6 p.m. Pacific. Still ahead, Apple's big push into India could come very soon. Detail on the iPhone maker's first retail store in Mumbai next. This is Bloomberg. global retail push continues. The iPhone maker now has a short list of locations for its first retail store in India. Bloomberg has learned that the iPhone maker has zeroed in on several upscale sites in Mumbai. Apple has been blocked from opening its own stores in India because it doesn't meet local sourcing requirements, but now it is moving manufacturing into the country. Joining us to discuss Bloomberg Tech's Mark Gurman. So Mark, tell us a little bit more about where things stand.
So for the past several years, Apple has talked a big game in India. Tim Cook has visited there. He's met with all sorts of celebrities, actors and actresses, government leaders there. They've opened up a development facility, a maps office there. But the reality of the situation isn't so positive. They've pretty much completely failed in India and have 1% market share, if not a little bit more, a little bit less around there in terms of smartphones, even though it's the fastest growing smartphone economy. So now they're looking to open up their first store there in Mumbai, obviously a big and popular region in India, and they're hoping that could start to turn things around.
Do we have any clues as to where specifically in Mumbai Apple is looking?
Yeah, we're told it's going to be in major districts on par with Fifth Avenue in New York or the Louvre area in Paris, but right now they're still narrowing down to a short list and going from there. But I still think it'll be some time before the store actually opens to the public.
So when, was my next question, might we actually expect this to officially be open?
Yeah, I'd imagine sometime in 2020 that, right now we're at the shortlist process, then they're going to have to, strike deals with the right people to actually build the store, then they're going to have to go through a hiring process. And building these complex stores, these take some time, all sorts of deals with a mall or other areas. It's a complex industry, so I would say 2020 at the earliest for their first store in India. And we've heard that to be the target for Apple beginning to open stores in India already for the past few years. So they seem to be on pace for that.
So India, like most developing markets, you've got lower income, you've got cheaper smartphone competitors. How well will Apple compete in this market?
As of right now, Apple is a completely non-viable option in India. The consumers in India want phones that have really high technical features, high specs. They care about megapixels. They care about processor speeds. They care about speeds and feeds. They care about bigger screens, but they want it at a very low price point. And the problem is that the iPhone XR and the older iPhones, that pricing is still 2 to 3 times the prices of competing phones from OnePlus, Huawei, Xiaomi, those lower end devices in India. So for Apple to really compete at a mass market level in India, they're going to need to bring the phone prices down considerably. And we've seen evidence that they've been doing that in terms of lowering India prices in recent weeks, specifically for the iPhone XR. But I still think they have ways to go there. And you even listen to Tim Cook on the earnings calls, right? In previous years, he sounded more optimistic about India, but this past call a few weeks ago, he was just straight up about it and said, this is not going to be a short-term success. This is a long-term play. The question is, how long-term will it be until Apple does find some success there?
Could, and we've got about 30 seconds left, could India become the next China for Apple if they pull this off?
Yes, but the thing is that this is going to take 5 to 10 years before they have any real penetration in India. It's going to require a big ramp up of retail stores, more employees, offices, but of course products and services geared toward the market in India.
All right. Mark Gurman, thank you so much for your reporting on this. We'll continue to follow. All right, that does it for this edition of Bloomberg Technology. We are, as always, live streaming on Twitter. Check us out there at Technology, and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.